Good evening, everyone. Time for another silver update. This is the 4-hour chart of silver provided by netdania.com. You can click on the link below. Now, I've drawn out a fairly complicated scenario here, and hopefully I can explain it. In the past, I have explained how the MACD is an indicator that is a valid indicator for trending markets. It's essentially a trending market indicator. So, as I've explained in the past, when you're in a bull market, and if you remember the references to Jesse Livermore and the famous Mr. Peacock, whenever asked for a tip, the only tip he'd ever give is, well, it's a bull market, of course, and so that would be enough to explain to you what you should do, which obviously is, if it's a bull market, you need to buy. Now, this indicator, as I said, is a trending indicator, and the way that one of the ways you can determine whether the trend is changing is if the indicator signals are changing. So, as you know, I've covered on my blog, we did have the breakout above the 28.50 level. The next key level is the $30 level, which is indicated by a number of trend lines which aren't drawn here, but also this resistance line of the most recent top made in June. But what I've drawn out here is what is the transition from, in my opinion, a bear trend to a bull trend. I'm going to try to explain this to you. So you can see these dollar figures that I've written in here, 11, 4, 2, 1.5. What those measure is the difference between the top and the bottom move of the signal. So the signal on the MACD is indicated by this blue line. You've got 1, 2, 3, 4, and we're currently at the 5th right now with the rally that we had today. So you can see with the first sell signal that we received on the MACD back in March, we ended up moving from about 37.5 to down below 27. So we're just going to call this an $11 move from here to here, and that was this signal. Now, we didn't get another signal in this bear market series of signals until right here, and you can see that that signal was given when we were at about 29, 30 bucks, and then down. I'm not going to measure each one of these, but that signal was about $4. So this bear signal yielded an $11 profit. This bear signal yielded a $4 profit. The next signal, which is right here, yielded a $2 profit between here and here. The next signal here yielded a $1.5 profit, and now we have another signal here, which, if I'm correct, will probably not yield anything at all. So you can see the opposite of that when you look at when we were still in an uptrend here. This is the only one I didn't do, and that's this sell signal here, and you can see that aligns right there, and it yielded nothing. It was quickly reversed. So this was a point when buy signals were still valid at that point, and then sell signals became valid, and I believe we're transitioning to a period where buy signals are going to become valid again. This is our latest buy signal. If you're tracking the buy signals, they're going to be here and here and here, so there's 3 of them. This one, of course, is an absolute flop. You got nothing, and then we came down. This one here is a very bad signal. This one is extremely poor as well. Here's a small buy signal that got something, but this signal right here, which actually doesn't even go down to anywhere near these signals, so we'd have to draw a line up like this. But you can see this signal is actually better than any of the previous buy signals. So we're beginning to transition to buy signals being more valid than sell signals, and of course that means we're transitioning to a bull market. So hopefully that explains how you use the MACD. It's a trending market indicator. If the trend is down, you take the sell signals. If the trend is up, you take the buy signals, and it appears that the trend is moving now towards the upside. Now I want to go over to the question of the night. This is from FL Headhunter, a question from the Silver Bomb. I'm an avid follower and listen to all you put out. Thank you. I just finished reading the Silver Bomb and it was excellent. Questions. The author sounds totally convinced that at some point the government will confiscate gold and silver, and then goes on to strongly suggest the old Morgan silver dollars and peace dollars, since they are valid U.S. currency and can never be confiscated. What is your assessment of these coins, and would you suggest stacking them? And I see that APMEX sells the Morgan silver dollar, brilliant uncirculated, for $47.99. The peace silver dollar, brilliant uncirculated, for $34.99 on their site. Do you like this kind of value, i.e. the premiums for the brilliant uncirculated quality of these coins? So there's a lot there in this question. Now, first of all, you've got to understand that the Morgan and the peace, these were the most overproduced silver dollar. There's a ton of them. One of the reasons why there are so many is that the government bought them back in these uncirculated bags. And then, of course, then in the 60s and 70s, they sold them off. Investors bought them. So there's a ton of these out there. $47.99 for a Morgan is absolutely absurd. I would never recommend anybody pay that. Yes, Morgans could become numismatic plays, but it's highly doubtful in my mind because there are just so many of them out there. Yes, many were melted, but it's got to be the most popular of the older coins. And I've covered that. You can look back in my other videos where I cover junk silver, and I actually give a spreadsheet breakdown of exactly how many were minted of each of these. So no, I do not recommend that deal. Definitely not. You'd be much better off just buying bags of junk silver. Now, the main question will the government confiscate gold and silver? Now, I've covered the confiscation of silver. Obviously, if you look at the amount of silver that's out there, it's a pittance compared to what the debts are. And yes, they could think about confiscating silver, but it would have to be in the thousands of dollars an ounce before they would even consider it, because if it weren't that high, it wouldn't even make a dent in the just the monthly deficits they're running. And we're going to look at the deficit here when we look at the national debt clock in a bit. And you have to remember that this term, confiscate, is actually not accurate as well. The government didn't confiscate, and you can go to Zero Hedge. A recent article tonight is about gold confiscation. But actually, it wasn't confiscation. What the government did was they passed a law that said that you had to sell them your metal. Of course, confiscation means they just come and take it. They didn't come and take it. They passed an executive order that mandated that you would sell it to them at a set price. That was, I believe, $20.76. Then, of course, they revalued it to $35, which is an effective 40% devaluation of the dollar. But nevertheless, they didn't confiscate it. They forced a sale. Now, are they going to do it again? It seems ridiculous to me. And there's a number of reasons. First of all, I don't think we have any. I don't think it's here. I think that it's been flowing to Asia for quite some time. It's been flowing to the Arab nations for quite some time. And how much is in Fort Knox, I have no idea. But my guess is that there's so little here, and I really don't think that there's a lot held by American citizens anyway. It's just not going to make a difference. So, yes, if gold goes to 10,000, 20,000, 30,000 an ounce, and silver goes to a tenth of that, maybe 1,000, 2,000 or 3,000 an ounce, yes, maybe the government might consider confiscating it. Of course, that's going to be a situation where they're in a tremendous currency crisis and capital crisis, where they just simply can't import anything. because their currency is worthless and they have no good exports, so they want to get anything that's of real wealth. And of course that's going to be capital controls. Something like happened in Zimbabwe. We're not anywhere near that point, and long before we get to that point, we're going to see many, many multiples of the prices that we're seeing now. So I think it's a very unlikely scenario. But again, I do recommend numismatic coins, but I certainly would not recommend paying these sorts of premiums for the peace dollar and the Morgan dollar. You're much better off just going with the junk silver. Now, next is the article that appeared on Zero Hedge. I've been covering this topic for a long time, and the way I like to make the analogy is that we're looking at a giant cart, and there's a number of people riding in the cart, and there's a number of people pulling the cart. The people pulling the cart are the taxpayers, and the people riding in the cart are the freeloaders, or people who are living off of tax money. And you can see here in this, we're talking 165 million state dependents. Now, if you remember in the last couple of years when Lindsey Williams came out and gave his updates, he was met with a lot of skepticism. Of course, Lindsey Williams is a pastor who supposedly, he claims that he has inside information from Illuminati insiders from the Alaskan pipeline, and they feed him information. I have no reason to doubt that what he's saying is true. He predicted a tremendous rise in the price of oil and then a crash, and that's exactly what happened. But one of the comments that he made that was very startling at the time, he made it a number of years ago, was that pretty much everybody would be working for the government. And at the time he made that comment, it just seemed so bizarre that anybody could say anything like that. But you can see now it's becoming more and more true. This figure, 165 million, there's a number of ways you can arrive at that. And I don't have time to go into the details of it, but go ahead and read this article. If you want to look at some of the details, you can see them in the National Debt Clock, and I've done a number of videos on these figures that are in the National Debt Clock. After you see what I'm going to show you next, you may have some doubts as to the accuracy of these figures. But anyway, if we look at these figures, we're talking about roughly 300 plus million in population, and really only a third of that being income tax payers. Now that's really scary right on its face. There's just no way to spin that. Now you've also got the state and federal employees. That's about 20 million. You've got U.S. retirees at nearly 70 million. And then there's the food stamp recipients. So it's my opinion that we're rapidly coming to the point where the cart is going to tip just from the sheer weight of all the people riding in it. Of course, the people pulling it every day, as more people give up because the burden is too heavy, and they go galt, they walk away, they leave the country, they just decide to earn less, they lay off their employees, they do whatever they find is in their interest to stop paying for others. Then the thing accelerates until, of course, the whole cart is just stuck in the mud and nobody's pulling it, and it collapses from the sheer weight of all the people in it, and you have a complete collapse. And of course, that's what we're moving towards, is a complete collapse. And so, as Lindsey Williams has advised, it's not in your interest to be someone riding in that cart, because when the thing collapses, there's not going to be anything for you. When the government cuts off the handouts, if you're dependent on the handouts, and again, I point out many times, I'm not making any judgments about whether you paid in, whether you deserve it, what your reasons are. It doesn't really matter. Your moral basis or justification for receiving money from the government, which is essentially receiving money taken from other people, the point is that at a point in the future, and that point in time is coming much faster than we can anticipate, at some point in time in the future, that money is either going to be cut off or so severely curtailed that it will be very difficult to live on the amount of money that the government is giving you. So with that in mind, I wanted to look at these numbers, and I was examining them very carefully to try to see what the trends are. And what really stuck out in my mind when I was looking at these was the rate of change for, we're going to look at the U.S. national debt, the U.S. federal spending, the U.S. federal budget, the U.S. federal tax revenues, which are made of income tax, payroll tax, and corporate tax. So this figure here in the green is all these three added together. Now, the anomaly that I noticed when I was trying to put this together, and it was for another topic, but it just jumped out at me, is that if you look at, I was trying to calculate the rate of change. So you can do kind of a rough idea by looking at the rate of change here on the tax revenues. You can see the tax revenues are increasing 6, 7, 8, 9. This is in the thousand column. So you can get an idea of how the federal tax revenues are increasing the rate of change. So U.S. federal tax revenues, all the money we're taking in is going up. And you can see that rate. Now, U.S. federal spending and the deficit, but the federal spending itself, you can see 729, 728, 27. So the fourth number in the column is decreasing as the fourth number in this column is increasing, probably at about twice the rate. So the money is increasing that we're bringing in. The spending is decreasing. But then look up at this figure here. This is the U.S. national debt. And you can see the rate here. Here's the fourth column number. It's moving so fast you can't track it. So let's go to the fifth column number, and that's essentially moving at the same rate that these other numbers are moving, the fourth column number in federal spending and the fourth column number in tax revenues. So tax revenues are increasing, spending is decreasing, and yet the national debt is increasing at nearly a tenfold rate. Now, how is that possible? Is this clock broken? Am I missing something? Is there something I'm not seeing here? How can it be that we're taking in more money, we're putting out less money, but our total debt is increasing at 10 times the rate that either the money is coming in or less money is going out? So it makes no sense whatsoever. Now, I don't know if that's an anomaly with the debt clock and the figures they're using. This national debt figure may be an independent figure that they're pulling that has nothing to do with this figure, and then they're just looking at a rate of change based on some figures they receive every month or 6 months. I don't know. But all I can tell you is that with revenues increasing and expenditures decreasing, debt is increasing, and that doesn't make any sense at all. So if you have an explanation for that, I'd love to hear it. Please comment on the video and let me know. So back to the silver price. It's my contention that we are now in the transition period where we are moving from a MACD sell signal event to a MACD buy signal event, and the buy signals are going to begin to become valid. The sell signals will begin to become invalid. You can see that because the profit from the sell signals have gone from 11 to 4 to 2 to 1.5, and now we have a $3 profitable buy signal. So the time is now to buy. Of course, I think this trend is going to continue for quite some time. I could be wrong, but the 28.5 line was breached in a very strong manner. I do believe that the $30 level will be breached in a very strong manner, and we very quickly could move to around $32. It could be as fast as tomorrow, but we'll have to wait and see, and we'll talk to you next time.